And welcome back to the Business Career College video series. In this particular video, we're going to look at long-term care insurance. Now, long-term care insurance is a fairly complex product, quite a bit more complicated than other forms of insurance in general. There's a lot of sort of ins and outs here, and in fact, the folks who tend to be best at long-term care insurance tend to have some sort of medical background as well. They tend to have worked in long-term care at some point in their past lives. So what long-term care insurance is going to do? It provides a recurring benefit similar to disability insurance, and that benefit might be paid on or based on a daily, weekly, or monthly amount. So daily it might be anywhere between typically about $10 to about $200. So let's say in this case we have somebody who has a $50 daily benefit. That might also get expressed as a $350 weekly benefit, or if we're going to a monthly benefit, that would be a $1,500 monthly benefit. Now that benefit is going to be paid based on the type of policy you acquire, either on a reimbursement basis or on an indemnification basis, or that might be paid based on an income basis. So a reimbursement policy is really like an accident and sickness policy where it pays based on submitted receipts. An indemnification policy basically anticipates your expenses, and an income policy pays more like a disability insurance policy where once you're eligible to claim, it just starts to pay. Now it's going to pay up to a maximum in most cases. It might have a dollar amount maximum. So it might pay no more than, let's say, a cumulative $300,000 of benefits over the course of the entire policy, or it might be for a time limit where the policy would pay for, let's say, 3 years or 5 years. Now, some of these have unlimited benefits, so some of them will pay this scheduled amount, and there will be no upper limit on the dollar amount or no upper limit on the time for which you can collect that benefit. So now what has to happen to collect the benefit? Well, you have to need long-term care. So how do we know that you need long-term care? How do we define that? Well, we would say that you need long-term care when you are unable to perform with most insurers 2 out of 5 what we call activities of daily living, or the ADLs. And the activities of daily living are basically the things that you do between the time that your alarm clock goes off in the morning and the time you step out the door to go to work. This is things like feeding, dressing, bathing, toileting, and some sort of provision around mobility. Now there's another set of conditions that can be met that would allow you to claim under a long-term care policy, and that happens when we have a cognitive impairment. And a cognitive impairment is an inability to think, perceive, reason, or remember. The types of conditions that would typically be associated with dementia. So once you're unable to do these things, or you have this cognitive impairment, you're then going to have a waiting period. And that waiting period is normally somewhere between about 14 days, to about 180 days. The norm today is something less than 3 months. What was happening originally when these policies were sold, a lot of them were sold with 180-day waiting periods. And what we found was that the people trying to claim often died between when they became eligible and the 180-day waiting period. So agents have really gotten away from selling that. That policy tends not to pay out. It's not good coverage if it's not going to pay out. And what do you do with the money? Well, you can use the funds for a variety of things. We might use the funds for an assisted living facility. And these go by different names in different provinces, but this is typically a facility where there is some degree of nursing assistance as well as possibly other forms of assistance for somebody who needs help. This can be used for in-home nursing, so that is somebody who's staying at home but has a nurse coming in to take care of them periodically. This can be used for an adult day home, which is sort of like daycare for adults. That's where you would drop your parents off on your way to work in the morning and pick them up on your way home, typically at an assisted living facility. This can be used for respite care. Respite care is a type of facility where, and it's often again provided at an assisted living facility, where you have your parents or grandparents normally living with you, but you need a rest. And this is common. We have what's called caregiver fatigue. And with that caregiver fatigue, the people taking care of mom and dad or grandma and grandpa are just wiped out, and they need to get grandma and grandpa off their hands for a couple of weeks, or maybe they have to go away for vacation or for work. They can drop them off at a respite care facility and have them taken care of for that period. We can use this even in some cases, and this is especially true with the income type of policy, which tends to be a little bit more expensive. With that type of policy, we can even pay for expenses associated with a family caregiver. And then we might have the requirement for hospice or palliative care. These would be the types of facilities where, sadly, somebody who's near death would go basically to live out their last days in comfort. Now, with the long-term care insurance policy, we do have some riders available. The riders that are available here will be some sort of an inflation protection rider, a cost of living adjustment, and sometimes that inflation protection happens during the time that you're waiting to submit a claim, or sometimes that happens after a claim is submitted. There's all kinds of different variations on this. We can have a waiver of premium. That's actually pretty normal with long-term care policies. And then it might be appropriate to have a return of premium. And that return of premium would pay benefits would pay back your premiums if you died before you got a chance to use your policy. That's like that terrible joke, my grandpa died peacefully in his sleep, not like his passengers. Underwriting for long-term care insurance policies is a bit different from what we're used to. Here, I'm not so concerned about something that might cause this person a premature death. What I'm concerned with is something that might indicate a predisposition to needing long-term care. So we're actually going to underwrite here primarily on the basis of what are called the instrumental activities of daily living, the IADLs. And these are things that would indicate the ability to live an independent life. Generally, if you can't do your IADLs, which are things like cooking, shopping, driving, having a telephone conversation, that probably indicates it's not going to be very long before you're going to need other assistance for your long-term care needs. So this is really the key here. In fact, somebody who has, let's say, a pre-existing heart condition, that's the kind of thing that might not even be a concern, because really, once that person starts to need long-term care, that means they're probably not going to need it for a terribly long time. So that's the basics of long-term care insurance. We have also to have a look at some details here around how or why there is a need for long-term care. So we have this demographic shift happening. Now, long-term care insurance is actually a very popular product in the United States, not very popular in Canada. And south of the border, I think our neighbors south of the border recognize that the government is in fact not going to do a great job of taking care of them later in life. In Canada, we're very used to this publicly funded health care where we figure that we're going to be well looked after. Well, let me show you something here, and this sort of emphasizes the need for long-term care insurance. If I could flip back to 1980, what we had in 1980 was a very small portion of the population that was retired, and the majority of people, a much larger proportion, at working age. Now, by about 2030, and estimates around this vary a little bit, but this is about what we're going to look at. By about 2030, we're going to see this idea flipped on its head, where there is this much smaller portion of the retired population and a much larger portion of the working population, which really means if you're one of these retired folks by this age, or any time really in the 20 years after that, we're going to see roughly the same demographic shift. That's going to mean it's a small number of people who have the burden for providing benefits for this large number of retired people. Now, something else we have to know with long-term care insurance is that the premium structure is not exactly what we're used to with other forms of insurance. Because it's a fairly new product, and because we have a lot of uncertainty related to this circumstance, when you buy an LTC policy, the normal premium structure is that you will have guaranteed premiums for 5 years. And after that 5 years, your premiums could increase, and some insurers set a cap on that and some insurers don't, and those premiums would be then the same for the next 5 years. And then after that, you might have yet another increase where your premiums would be even higher for the next 5 years. Most long-term care policies are going to be paid up, which means no more premiums have to be paid at the later of either 20 years of paying premiums or at age 55, whichever comes last. For most people, that's going to be 20 years. Long-term care insurance is a much more popular product in the sort of 50-plus market. However, if we could get people at a younger age excited about buying it, we would find their costs are going to come down quite a bit, and they will have the advantage of having their policy paid up at a relatively young age. So long-term care insurance, not a very common product to see sold today. It is gaining in popularity, but there is a large portion of the population that really hasn't considered this reality. And I think once people start to recognize this as reality, we're going to see some substantial changes in long-term care insurance, and people will start to buy it in the types of numbers we're used to south of the border. So I hope that helps to understand long-term care insurance. It is a fairly complex product, but most of the basic concepts we've discussed here. Thank you very much. I hope that you've gained a good understanding of long-term care insurance. Enjoy your studies.